Good morning. I would like to say happy Friday, but in a moment you'll see markets and you'll understand why it's not for many. It's 9 a.m. in Shanghai, Shenzhen, and here in Hong Kong. You're watching the China Show. I'm David Ingles with Rebecca Chung-Wilkins in Singapore.
Yeah, and happy or not, we are counting down to the open of markets in Greater China. Our top stories today. Brent oil tops $100 a barrel after the US threatens to intensify strikes on Iran over attacks by Houthi militants on ships in the Red Sea. Inflation fears weighing on Asian equities, already grappling with doubts over the AI rally. We're also watching for CATL earnings as Chinese markets are set to outperform the US for a fourth week. And also on the program, CXMT sets the date for its Blockbuster trading debut, following an IPO set to raise close to $10 billion.
And I'm Avril Hong in the Cambodian capital, Phnom Penh. The Prime Minister Hun Manet tells us exclusively he's stepping up a crackdown on scam networks. We'll also speak live with the Cambodian mining and energy as well as commerce ministers. Those conversations coming up.
Good morning. Well, yeah, as Dave pointed out, maybe not a very happy Friday. We really are moving what looks like into a new phase when it comes to that conflict in Iran. These fresh threats from President Donald Trump, and of course the expansion really of this conflict into the Red Sea. The Red Sea, of course, has been this critical alternative pathway that's helped provide a bit of relief. We have had this sort of stutter-start, stop to Iran so far, but there is, I think, a big question now over in this second phase, just how much resilience, just how much of a buffer is even left to tolerate this kind of pain. We're looking at places like Europe, Dave, where there is already such a pressure over diesel, where they're also pressuring refinery issues, and of course here in Southeast Asia and Asia and the region more broadly, where there is so much reliance on fossil fuels, diesel included as well, Dave.
Absolutely. And I think you simply have to look at, well, obviously the oil price for one, you look at yields, another, you look at some of the inflation projections out there, you look at this tightening bias that we're still in, actually, from what's been taking place since the start of this war up until right now, and even more so because of everything that's taking place. And to Rebecca's point, you know, the Red Sea was Plan B, still is Plan B, but how much of that do we need to rethink now? In as far as this escalation is concerned, re-escalation, and of course we understand from Axios as well that Donald Trump is also considering further military action, which we'll get to in a moment there. But yes, so as we flip the page and have a look at where we are as far as markets go, you'll see equity markets in a moment there. Up until today, markets managed to take this gradual run-up in oil prices in stride. And then suddenly you had that aha moment overnight that oil is up 40%. You had these earnings coming through that obviously did not impress investors. And then on top of that, we're talking about tariffs yet again. So, yes, we are looking at declines across your screens right now. We're off by about 2 or 3 in Taiwan and Korea. Stocks 50 futures, though, in Europe and the U.S. Perhaps the silver lining, flip the page, as we go into the thick of things, that we could have bookended. Let's see, of course, these declines across these risk assets. Here is your pain point right now, whether that's your U.S. 10-year or your U.S. 30-year, which effectively is now at the highest level since 2006, 2007 on the long end. And yes, we are looking at bonds continuing or extending the declines we had in the Treasury market overnight. Japanese inflation, by the way, overnight also coming in a few hours back here, slightly to the upside as well. That takes us into the China story today, where, you know, it's the opposite story when you look at the bond markets, but not for positive reasons altogether. We are looking at declines across that market. We have a lot to get into in as far as specific themes and earnings and stocks, CATL's an earnings story. There's a transaction coming through out of HSBC, of course, which we'll get to in a moment. And Pony AI is reflective of the many policy pronouncements, which we'll talk about as well as we move into the Friday session. But yes, the top story remains at the current moment, Middle East. Of course, you have U.S. forces say that they have launched further strikes on Iran, and that comes, of course, as President Trump says that he will hold Tehran responsible for any attacks by Houthi militants in the Red Sea. Let's bring in Jill Deeses, our news desk managing editor. She's with us right now to help us understand where we are and how different the picture looks from Monday this week. Jill, get us up to speed here.
Yes, good morning, David. So look, at this stage, these attacks by Houthi rebels on these shipping tankers in the Red Sea is really what's escalated this fairly dramatically over the last few days. And so now you've got these comments from the U.S. president to Axios saying that he would be planning what in his words he describes as a massive attack should these strikes continue. Obviously, as we've been discussing, this presents a pretty enormous strain on shipping vessels that are actually trying to pass through this alternative pathway on the opposite side of Saudi Arabia, on the western side of Saudi Arabia. So at this stage, again, you've got these ongoing strikes from the U.S. military that are happening within Iran. I think the 13th consecutive day of strikes happening right now. So you really are a far, far way away from where we were just a few weeks ago when those interim peace negotiations are going on. I'll add as well, the New York Times now reporting that there was a U.S. ceasefire deal presented to Iran by the Iraqi PM that Iran has rejected. And so, again, just all of these different pieces of this that are leading us to see something that could potentially escalate into even further conflict.
Jill, just talk us through some of those risks that you're pointing to with further conflict when it comes to the Red Sea. What have we seen being able to even get through so far with that waterway? And I mean, we spoke about this yesterday. Who can actually bring these two parties to the negotiating table? Is there any prospect that we see a return to talks?
Yes, I mean, Rebecca, really, really difficult to tell at this stage where we actually would have to be in order to see those talks resume. In terms of shipping traffic that we're actually seeing get through, the Red Sea, get out of the Strait, there's a couple of Chinese-linked vehicles that have been vessels that have managed to make their way out. But again, I think, that's just a really, really sort of a trickle there when you consider, this as being this alternative pathway for the world's energy supplies. You could presumably, you're looking at the map on your screen right now, go north, go through the Suez Canal, a safer passage there. But obviously, that would add an enormous amount of time to, the shipping pathways for some of these tankers, particularly those that are trying to get out into Asia. So again, putting more pressure on fuel prices there, if you consider that as an alternative pathway. And I think what this is ultimately pointing to is that you are seeing a tremendous amount of strain here now in terms of who can actually get these two sides, the U.S. and Iran, to the negotiating table. We've seen attempts by Pakistan, Qatar, obviously this latest news line from the New York Times about Iraq. But it really does seem like there's just so much that they're unable to bring together at the negotiating table, whether that involve Iran's nuclear capabilities, whether that involve control over the Strait of Hormuz, that it's really difficult to see a pathway at this point in time.
Yeah, Jill, thank you so much. It does seem like the hardliners on both sides are getting the upper hand of at least the concrete actions we're seeing on the ground. Jill, fantastic. Thank you so much. Jill Deeses, our managing editor. Just speaking of geopolitics, just to note a development, this part of the world that's taking place in the last, at least the headlines that's come through in the last hour or so. Actually, can we bring this down? Let's mention first what's been taking place in the South China Sea. So, about an hour back, thank you so much. About an hour back, Xinhua News reported that China has taken control measures on Philippine ships. There's not a lot of detail on this just yet. It's something we will talk about in a moment once we have a fuller understanding of what's going on there. But again, the geopolitical story is playing out in this part of the world, and Stephen Engel, of course, will have more details on this in a moment. Just to also mention, speaking of the Philippines, on the oil story related to this, the Philippine peso just hit a fresh record low. This one, of course, is coming in also in the last few minutes or so. Okay, a bit of a tease of what we were going to talk about. Here it is again, Mag 7, or should we call it at this point, if you're long these markets, the Maleficent 7. This is a ratio between that and the S&P 500. The chart goes down, it's broadening out, the chart goes up, Mag 7 leads. And as you can see, on an absolute level, it takes you all the way back now to about this time last year, effectively saying we've now lost the leadership as far as that specific large cap group is concerned and quite a substantial drop that we had in the overnight session in terms of market cap price amidst, of course, Rebecca, all the earnings that we've seen so far from that group.
That's right, Dave. Melissa 7, is that a copyright Dave Ingles special there? Anyway, keeping on that theme, Intel shares jumping in late trade as its revenue forecast shattered Wall Street estimates, indicating that booming data center spending is still helping fuel a long-awaited turnaround. Bloomberg's tech Ed Ludlow has more for us from San Francisco.
Intel is a CPU and a data center story. The CPU market is really taking off. That was the sort of overriding message from CEO Lip-Bu Tan when I spoke to him. And the situation is that demand growth is outpacing what is improving supply. If you remember, Intel left money on the table because they just could not meet customer orders, particularly on CPU, which is everything for them right now. So their own production and processes of their own products is improving, but they still cannot meet 100% of orders. But you look at the guide for the current quarter and the sort of 59% growth in data center, largely CPU gone, they are going in the right direction. Then it became a CapEx story. So CapEx will be more than $20 billion this year. That's a surprise, right? That's a change of plan, and CapEx will be higher next year too. And what gave Intel confidence, because Lip-Bu Tan is cautious, is the visibility they have on demand. They have a number of LTAs with customers. They look at the product side. They look at the foundry side. They would not invest into this. They don't deploy CapEx if they aren't sure of a return. There was this kind of very big reaction when the numbers hit and the commentary on CapEx. Things kind of pulled back a little bit. But for now, Intel is saying it's making progress. It's not fixed everything. Margins still aren't what they used to be. Foundry, there's a lot of questions, but they're headed in the right direction. This is Ed Ludlow for Bloomberg News in San Francisco.
And up next, we talk market strategy as Asian investors navigate the latest signals on the AI trade, all that while geopolitical and inflation risks are still surging. StashAway CIO Stephanie Leung joins us just ahead. And of course, we are counting down to the open of trade in Shanghai, Shenzhen and Hong Kong. A very good morning to you. You're watching The China Show.
Right, welcome back. 15 minutes and 30 seconds away from the opening bell. And as you can see, we are set to track losses from overnight into the Asia-Pacific. We're off 2-3% on some major markets in the Asia-Pacific on the back of just this broad risk aversion out there, whether you're blaming oil, yields, geopolitics, lackluster earnings, or the lack of focus on what does matter as far as earnings go with CapEx or return on investment, what have you. So do you buy this dip? Do you wait this out? And what are the longer-term opportunities that this sort of dip gives you? Joining us here in set, Stephanie Leung, Chief Investment Officer at online wealth manager StashAway. Good morning, and I would like to say happy Friday, but okay, happy Friday.
All right.
So what's the short-term, what's the advice short-term? What would you do today and going into next week with this sort of retracement we've seen?
Yeah, I think we're in the summer season, and as we've highlighted a few weeks ago in our outlook, summer tends to be volatile. And indeed, we've seen quite a bit of profit-taking from the AI hardware names to start with, and now we have the tariff, we have the Strait of Hormuz kind of reclosing, we have oil approaching $100. So all this actually creates quite a bit of uncertainty in the near term, particularly when you kind of pair that up with the fin trading during the summer, where many fund managers are going away. So what's left is basically momentum traders, resellers, which sort of tend to create these kind of volatile environments. So I think in the near term, markets could chop around, but the key thing to watch is, of course, what Trump decides to do in his various adventures. And I think if you look at oil prices, that probably gives you a good glimpse or kind of a clue, because I do think that actually a lot of people think about oil prices as the result of, what Trump does. In fact, if you think about it the other way around, oil prices actually feed into what he does. So when oil was at 90 last time, Trump basically tackled, and they had a deal with Iran. Oil prices actually fell pretty swiftly to $70, and I guess negotiations going on, but then because oil is actually not at a threatening level, so there's more room for both sides to kind of negotiate and try to work out a deal. Of course, these things never kind of go in a straight line, and now we're back at 90, so I mean, I don't know. Maybe we've got a taco.
Well, it's 100 now.
Yeah, exactly.
People are trying to time when the taco comes. It's also not very. It's unhealthy mentally to try and figure out changing policy in the U.S. all the time because you don't know when that's going to happen. Fundamentally, we were leaning on earnings and AI to be able to sort of tide us through. That helped us in April and May. Why do you think we're seeing a massive pullback right now in specifically Mag 7? And would you buy that dip specifically?
Yeah, I think if you look at Mag 7 this year, I think as you've shown in the chart just now, I mean, they have really underperformed. So when we look at, for example, during the first half, S&P was actually up around 10%, and but the Mag 7 was flat. So the rest of the 493 actually outperformed the Mag 7 significantly in the past 6 months. And a lot of that, of course, was driven by the AI hardware names, but like half of that also was driven by the broader market. So I think if you think about the Mag 7, of course, they were the darlings of the last decade or so. And it was the era of social media, it was the era of cloud. Now we're moving on to the era of AI. And as we look at kind of broader index, even if you look at the S&P, during different periods, there are different leaderships. So I think the question mark is, okay, is like companies like OpenAI and Anthropic going to become the more important companies compared to the Mag 7? And in particular, given that Mag 7 right now is spending a lot of capex, before, I mean, it offers a lot of safety for investors, a lot of cash flow. Now that it's being put in a question mark. So I mean, Mag 7 right now, if you compare it to the best growth companies, they're not the highest in growth. If you compare to the safest companies, they're not the safest ones. So there's a kind of a somewhere in between, a no man's land, I would say. So I mean, I think that's a question mark going forward for Mag 7 as a whole.
Stephanie, Rebecca here. I just want to pick up on the point that Dave was making, kind of that short-term versus longer-term view when we think about these shifts here. You mentioned that pullback that we've seen in AI hardware, some of that rotation elsewhere, healthcare and so on. I'm just trying to get a sense. Do you see that as a durable shift, or is this a moment, a transient moment of profit taking? And then how are investors, how should they be kind of with a slightly longer-term view, how should they be reacting? Yeah,
so if we look at what's going to ultimately drive long-term returns, I mean, it's obviously earnings growth. And still, I mean, where you find the best earnings growth is within the AI kind of value chain. Now, of course, at different times, different parts of the AI value chain offers you most visibility in terms of return on investment. Right now, it's still hardware. And I think last night's earnings actually clearly shown that, for example, Intel has a very, very clear kind of path to seeing returns, whereas hyperscalers like Google has perhaps a lower visibility. So I still think that remains kind of the core of the overall kind of bull market. But of course, you see kind of bolts of volatile periods. Right now, we're in one, and investors naturally rotate into other safer sectors or sectors that kind of are in favor. But I think over the long term, basically, if you look at fundamental, that's still very strong. U.S. economy is still growing very strongly. Of course, we have a slight inflation problem, but it is during these times when you are in inflationary growth where equities tend to perform quite well. But as investors, actually, we don't have to think about the short term necessarily. And we've actually done quite a bit of work on regular investing recently that compares quite favorably with the market timer, which I'm happy to kind of talk about more.
Yeah, I want to pick up on that. I know you've done a lot of this research into sort of dollar cost averaging and essentially when is the right moment for the investor to lean in. Just talk us through your thesis there and what you found.
Yeah, I mean, we've done some very interesting work recently, and next week we're going to publish our periodical monthly Hsiao Insights that talks about that. And basically, the insight that we found is what we're trying to compare is, let's say, for an investor who buys at every dip of 10% dip, 20% dip, 30% dip, how does that compare to somebody who just invests regularly, let's say on a monthly basis? I think intuitively, you would think that actually the investor who can buy on a dip, on every dip, would beat the regular investor. But in reality, when we ran the numbers, the regular investors actually win most of the time and by a pretty wide margin over 5-year, 10-year, 15-year time horizon. And I think the reason behind that is actually quite logical. So if you think about the dip buyer, they have to wait for the dip. But actually, bull markets run a lot longer than the bear markets. So you have to wait for a long time for that dip to come. And by waiting, that's actually the most expensive game in the market because you lose out to all those gains.
The underlying premise there is there needs to be a sustained bull market.
Yes.
does that apply in a market like China where it's always tactical and the index would be at the same level periodically over the period of 20 years at about the same level, where it's a different set of opportunities? How does it work in China?
So, I mean, even if you look at China, it's arguably perhaps one of the worst performing markets in recent years. I mean, the total return is still positive. So, I mean, if you compare, if you get the dividends, etc., that's still like an upward sloping line. The slope is, of course, less steep than the U.S. market. So, if you were to dollar cost average in China, probably your gains would be lower than that in the U.S. But still, I mean, you make up for that volatility exactly because you dollar cost average.
Not just price. Yep, absolutely. That's correct. Total returns actually quite substantial when you look at Hang Seng Index. That's a good example. Fantastic. Stephanie Leung, Chief Investment Officer at StashAway. Right, let's have a look at where we are as we go into the Friday session. Should be down on the Hang Seng Index, dollar China, and the 10-year yield. I believe we have a bond auction as well today. We have lots more ahead. This is the China Show.
Good morning and welcome back. If you missed that hot headline that crossed your terminal earlier this morning, HSBC is selling its life and health business in Singapore to Allianz. Just keep an eye on reaction to that. That deal is expected to be completed in the first half of next year. Elsewhere, quite a few developments overnight for various sectors, autos, energy, gaming, all being scrutinized. Energy, of course, off the back of these geopolitical developments, Trump's comments threatening to step up attacks. Autos, we've also seen those July retail car sale estimates dropping by an estimate sort of 16-17% or thereabouts. The gaming sector also in focus after we had, I think it's just shy of about 200 games approved in July, including 4 of these imported ones. Of course, the broader context there is that sell-off that we saw led off by Tencent earlier this week. Some concern over the gaming revenue slowdown there, Dave.
Yeah, and might this actually change and take some of the sting out of that tone there? So, yeah, just under 193 domestic online games. So a lot of big movers to tell you, right? So there's Tencent, there's HSBC, as we were just talking about there. By the way, in case you missed the other big story, of course, CXMT will be trading early next week. They have set the trading date, so mark your calendar, save that date. And, of course, the other big stock to track today is CATL. It's coming out with earnings today, and as we were just showing you in that other graphic there. So just in terms of estimates, you can read about it on your screens. I think in terms of the valuation on the stock, we're trading at about 1 standard deviation below your historical mean, so we're trading on the cheap side of things. We'll see what these earnings come in on, and of course, we'll see what the commentary is going to be looking like. As far as the projected upside on the stock price, substantial as well. We'll get into all of that, including many more. The Open is next. This is Bloomberg.
Good morning and welcome back. You are watching The China Show. We are counting down to the open of cash markets, just 30 seconds off or so. And it's really a heavy dose of geopolitics, meeting all of those other developments in markets overnight, not least earnings. Of course, we have the tariff news when it comes to Section 301 and the so-called forced labor tariffs that have been rolled out on 60 different economies. Elsewhere, the war in Iran intensifying and opening up on a new front when it comes to all of that risk and tension that we are now seeing mounting in the Red Sea there, Dave.
Yeah, but with the oil price at $100, and I think you look at this sell-off, and we haven't talked a lot about it, but yeah, the sell-off we saw across global bond markets, and I think we're very close now to taking out the low on the aggregate index that we last saw. I think it was in March, and beneath that, we're back to levels on bonds on aggregate going back about a year or so. That takes us into really the Chinese 10-year yield, which has remained stable and perhaps might actually see this as an opportunity in terms of what we're seeing elsewhere with these yields picking up across the world. Anyway, we're down in the equity market at the very start there. CSI is down about 1%. CATL, which is bottom row, A shares on your screens were flat, set to release earnings today. Just keep an eye on that. Of course, also has a listing here in Hong Kong. Speaking of, flip the page, have a look at Hong Kong. Tencent and NetEase and some of the gaming companies on the back of 190 plus, of course, in as far as the new online gaming approvals were concerned for July. HSBC, that big announcement and the transaction. Allianz will be taking over the life insurance assets there. 2.1 billion closes next year, I believe, is the timing there. So we're down about 1% on HSBC, down 2 on Tencent, and some of the other stuff on deck today. CXMT, speaking of listings, right? So we now have a date for that massive listing. It's early. It's Monday next week is when that hits the markets and the onshore markets. And just speaking of, before I toss back to Rebecca here, we're just getting a line coming through on the other big listing, which is here in Hong Kong, of Innolite, which is said to be closing its books early. So it looks like there had been enough take-up there to do so. It's up to $7 billion for that Hong Kong listing, Rebecca.
Yeah, absolutely. All of these tech and AI names really supercharging the IPO market there. But we have also had a kind of variety, really, of news updates over the past 24 hours that are going to read through into markets today, not least the fact that China has started issuing robo-taxi permits again after that suspension in April. We had that incident in Wuhan with outages to about 100, I think, or so vehicles. Sources say now this has been occurring gradually in some cities, following an industry-wide review last month. Elsewhere, we are also watching these gaming shares after China approved 193 domestic and 4 imported games for July. An XD game was among those imported titles that have been given the green light there, Dave.
Yeah, just back to, I think, one of the earlier points you were making. Auto stocks on the back of, obviously, the robo-taxi and some of them in that business. Separately on industry data, so you have the China Passenger Car Association, or PCA, with their estimates here that the retail passenger vehicle deliveries or sales fell nearly 17%. That's for the current month. That's compared to, of course, what we saw for the same month last year. And they're looking at weaker consumer demand and other seasonal factors. So that's just a look at some of the big sector moves and news that we've seen in the last, 24 hours or so. Now, just to wrap up the week, and I know we've been looking mostly at the negative news because of the drawdown we're seeing across most of these markets currently, but on an aggregate basis, China's actually outperformed yet again this week. So that now takes it to 4 straight weeks. This is MSCI China over the S&P 500. And the last time we had 4 straight weeks was way back about 17, 18 months ago at the start of January of last year. So I guess just something to think about as this is there anything more beyond the simple rotation that we're seeing here in this underlying market? Just, I guess, keep in mind, too, we have big listings coming through, plus, of course, the Politburo meeting, which we're also keeping an eye on, Rebecca.
Yeah, that's right, Dave, exactly. And thinking about some of those listings that are coming up, investors now also looking ahead to Monday's trading debut of CXMT, hopefully to help renew this rally in Chinese chip stocks. We're joined now by Leung Tu. She's our managing editor for Asia Equities. Really just talk us through this, potentially the biggest ever that could come. How important is this for markets?
Yeah, it's definitely a bellwether for China's semiconductor industry, and it is going to be second biggest listing, right, after Agricultural Bank of China's listing quite a few years ago. And expectation is really, really high for its debut. We're looking at about 500% to 600% gain, according to Hyperliquid's platform that uses perpetual futures to track, to bet on the debut day. And all of that just means that, there's a lot of investor demand. And also, because the valuation is usually kept artificially low for these IPOs in China, just because regulators overall want people to make money from these big deals. So if you look at valuation, I'll give you an example. The pricing for CXMT is indicating a 2.4 price to book ratio, and that is about 50% discount to global DRAM peers. We're talking about Micron, SK Hynix, and Nanya in Taiwan. And if you compare that to its local chip making peers, such as SMIC or Hua Hong, we're looking at 80% valuation discount. So it's almost a steal for many investors.
A steal, but nonetheless, I mean, it's still quite a hefty entrance. And I'm wondering how you expect that to kind of read through. What are the ripple effects for the various indexes, the broader markets?
Yeah, so I think there is a short-term sort of impact and long-term impact. If you look at short-term, a lot of investors recently have sold their chip-making or tech stocks to make room for this IPO. That's part of the reason why you saw Star 50 plunged recently and went into a bear market. So if this IPO does well, that could also mean it'll restore investor confidence and potentially bring some new money into the market, and that would also bode well for the likes of Yangtze Memory, which is also sitting in the wings to debut. But there are also people such as HSBC strategists talking about how this deal may suck up a lot of liquidity, so that could also mean some jitters in the near term for China's market.
Thank you so much. We wait with bated breath for Monday morning. That's Bloomberg's managing editor for Asia Equities, Lien Ting Tu. Now, coming up, our exclusive with the Cambodian Prime Minister, Hun Manet, on how his government plans to crack down on scam networks. Stay with us. You're watching The China Show. This is Bloomberg. Good morning and welcome back. You're watching The China Show. Now, Cambodia's Prime Minister has pledged to step up a crackdown on transnational online scam networks operating out of his country. Speaking exclusively to Bloomberg, Hun Manet warned that criminal syndicates are adapting by fracturing into smaller, decentralized cells.
These are the cooperation to tackle common issues go well beyond geopolitics. This is for the interest of all countries. Criminal network can attack countries that they don't have alignment with political. Anything they can exploit, they exploit. They can attack both U.S. and China at the same time for the benefit of money from scam operation or drug operation. So I see all this cooperation doesn't have to be confined within or be a hostage to, an area of what we call geopolitics. Sometimes it's too overblown when we focus on the negativities. But overall, the positive relationship between even the main, China and the U.S. has existed for a long and multiple channel.
You talk about how these criminal groups are becoming more sophisticated. A UN report shows that now they're even acting like corporates, that they're using, for example, in the Southeast Asian region, some of these criminal groups, concessions within special economic zones to operate. And Cambodia has dozens of such zones. What is Cambodia doing to ensure that such zones are not being used to facilitate criminal activity?
Yes, we have learned from experience from other countries. We have, I give strict instruction to our security agencies, work with local government, working with agencies in charge of the SEZ to make sure that no SEZ has been used. If any SEZ is found to be covering for criminal scam, they will be liable just to the law, just as any others. So far, we don't have any evidence on those. We're very careful on this matter. So a lot of SEZ in Cambodia is a platform and the area for attract of foreign direct investment in multiple sectors. So these are the areas that keep growing, and we continue to hope to attract more investment and expansion of the business both in the SEZ and outside the SEZ. We will be committed, and we are committed to continue to crack down on this. And we have seen the result. We will make Cambodia become an area that's not easy or worth to stay for scam online. This is what our commitment, and we will continue to do so.
And that was Avril, of course, our colleague, with that exclusive conversation with the Cambodian Prime Minister. In fact, let's head live now to where Avril is, and she is standing by there with another senior member of the Cambodian government. Avril.
That's right, guys. Joining us now exclusively is Hsiao Rotanak. He is Cambodian Minister of Mines and Energy. Minister, great to have you with us. Now, energy prices are in the spotlight again. Brent is topping $100 a barrel yet again. What is the fuel situation in Cambodia right now? Because we hear how Cambodians are cutting back on fuel usage on pretty much everything.
Just like the rest of the world, we are very concerned about the latest development. But what if we can draw from what we have seen in Cambodia is that our diversified sources have allowed us to be quite stable. So we do not have any interruption to industry or shortage in the country. And the good thing is also about our electricity, because we have 63% from cleaner sources. And that has enabled Cambodia to absorb the shock that otherwise it would be a much stronger shock. And this is to confirm that the path we are on is correct, that a national resilience comes from having many options, and it turned out to be that a cleaner option is the best we had.
On fuel, though, is it not an issue, especially in the rural areas, given how fuel prices are climbing?
The supply, our primary task is to make sure that we don't have interruption or shortage in terms of supply. And our diversified sources have enabled us to do that. Prices have escalated compared to the previous Hormuz crisis. But we have reduced taxes and duty and VAT, and therefore we have helped absorb the shock so that the pass-through effects, it will not be 100% to the consumers. And electricity prices have stood its ground. So we do not, and we have not increased electricity prices. That helps industry and businesses.
Can we be expecting more of that support, though? Because in terms of lost revenue, it's costing the government $50 to $60 million monthly. So what else can be done, given how these budget pressures are mounting?
We value our people and industry the most. In this difficult time, we want to make sure that industry continue to grow, at least keep their factory processes going, and household above this kind of problem. So if it were to take longer, we will continue to support our households, our industry, as long as it takes.
Okay. Talk to us about the future plans as well, because as part of the energy mix, LNG is coming on board, 900 megawatts worth of capacity by next year. What are the import plans for Cambodia?
Our target is to have at least 70% renewable by 2030, which is going to set Cambodia as the second country in Southeast Asia that has that high renewable share. And the reason why we are doubling down on renewable energy, because we believe in sustainability. We believe that our economy going forward will have to be based on sustainability. And as I said, this cleaner option has basically allowed us to absorb external shock better. There is no possibility that a country like Cambodia, being a small open economy, could insulate itself from every external shock or event. But what we can do is to make sure that our diversification and reliance on different sources of clean energy will also reduce external shock to Cambodian economy. So that's why we are doubling down. Gas, LNG, as a transition fuel, because it will have a role to play in the energy transition. So our 900 megawatts LNG power plant coming up will be that part of the transition that we may need. So at the end of the day, this will be within the lower 30% threshold, and the 70% will have to come from solar, wind, and hydropower, and biomass.
Understood. But where are you going to be importing from? What are some of the suppliers that you are negotiating with? Which countries so far?
For the 900 megawatts power plant, we are going to float a tender. And that will be a competitive process that we have already seen interest from the United States, from Canada, from Australia, from our region itself, and from the Middle East. So we will find out very soon when we actually float that tender and see who can offer the best competitive offer.
So it's about price?
It's about price and stability of the supply. We're looking at both.
So does that exclude the Middle East then?
We will cover all because the Middle East, despite the current crisis, we believe that in the future they will be able to to be part of the supply chain for LNG. So we will not exclude anyone from this offer.
You talk about the US as a potential supplier. What about the shipping costs that could be involved there? I mean, how do you offset that with the expectation that maybe there's a glut coming in the next couple of years and then costs might come down?
We'll have to see what it can offer, but we have like companies on the ground, even downstream here. We have Caltech, Chevron on the ground. We have Total Energy from France. We have others. So through their wide network, I think there will be something they could offer. So being the U.S. being a far away from Cambodia, but through their diversified portfolio in the region, I think perhaps they have some role to play.
The role of renewables. You talked earlier about how more than 60% of capacity is coming from that. How much more grid investment do you think needs to go into this as you grow renewables?
Our system we have today has attracted more than $33 billion in public-private financing. Alongside this, we have the World Bank, Asian Development Bank, AFD, JICA, KOICA, Korea, and even KfW, Germany in this together. Going down the road, we will need a little bit more, several billions more. But again, it goes into a few areas: generation, transmission, and storage. Now, if you look at the International Energy Agency statistic, every year generations receive about $1 trillion, but only about $400 billion go into the grid. So there's no parity there. But what is good about Cambodia, we are moving on both fronts at the same time. So we are investing in generation just like we are investing in transmission and storage, so that they all move in parity. And that we don't have any problem in terms of taking more intermittent renewable energy from further afield.
What about where those investments are coming from?
Diversified.
But a lot of it is coming from China. That's the reality.
Hydropower is predominantly from China, because China contractors are the most cost competitive. But when you look at transmission, international capital that come and finance local company at scale. For example, we have one project, 1,100 megawatts in one place. So in this cluster, we have more than 1,000 megawatts of solar panels, and we have 500 megawatts of battery storage. And this is a mixture of international financing delivered by Cambodian company. So we can see Cambodian company at scale, but we also see FDI at scale. We talk about another 1,000 megawatt pumped storage hydro, which will allow Cambodia to integrate considerably more renewable energy resources in the future. And this is more than $1 billion from China and multilateral institution in terms of financing of transmission line. So we have international confidence at scale, but we can also see local company at scale. But the good thing about our grid is that we are introducing what we call grid forming technology, which is to make sure that we don't have to rely on coal for stability of the grid. So now we integrate a battery storage system into this, and Cambodia is one of the first country in the world to try this, and it is showing it's working. So we're making sure that our grid is staying at the frontier of system innovation.
What about the ASEAN power grid? That's been something that's been talked about for a very long time. What progress is actually being made on that front?
National system can be as strong as its worst day. And Cambodia believes that a more integrated energy market would be the way to go for us, ASEAN, us mean being ASEAN, to decarbonize in the most cost-effective way. And that is why Cambodia is a strong advocate of the ASEAN power grid. We believe that we can build ASEAN resilient together more cheaply and faster if we can pool our resources together to do this grid, and we can draw each other competitive advantages.
Minister, it's been great to get you on the program. Thank you so much for taking the time, especially at a time like that. Back to you guys, Dave.
Thank you.
Fantastic. Avril, we'll be back with Avril, of course, later on the program. There's more coming up from Cambodia here when we speak exclusively as well here to the Commerce Minister about balancing trade ties with the United States and also with mainland China. That's after, of course, Beijing's warning not to sign deals that harm its interest. Lots more ahead. This is The China Show. Welcome back. Just very briefly, so you've probably seen the latest escalation in the Middle East in the Red Sea. This part of the world, in the South China Sea, things are actually developing quite quickly. And the latest we know is, well, number one, about an hour and a half back, I would say, we heard, of course, from Xinhua News that the Chinese Coast Guard has taken control measures on Philippine ships. A short while ago, within the last hour or so, we've now heard from the U.S. military that a Navy carrier strike group is transiting through, present tense, the South China Sea by the Luzon Strait. That's a large island, of course, at the very, very top part of the Philippines there. And we will get you more details on what's going on. This is from a very recent post on X from the 7th Fleet, and those pictures, of course, also coming through as well. So we'll bring you more details once we have more information on that. Just to pivot back to the energy story and the sell-off we're seeing on the energy front with oil prices at 100. We're pulling back, just to also note the delta there from about this morning or so. But energy stocks are playing a lot of catch-up to the upside, given, of course, what we've seen in the last 18 hours or so. Just very quickly, Innolite listed in mainland China. We understand now is said to be closing the books on the Hong Kong listing that's coming up of up to 7 billion shares, or flat or slightly to the downside right now, about 30 minutes into the cash market session. The second hour on the China Show is just ahead.
Good morning and welcome back to the China Show. Here's a look at the CSI 300 about half an hour into the cash session. We are down, well, about sort of 0.7% or so there. Worth also just keeping an eye out for volumes, I think, onshore more broadly. We hit a 3-month low yesterday. Worth seeing where we close out the week, Dave.
Yeah, well, we have almost a full trading day left, so we'll see what happens, where we go from here. Certainly declines across the board as far as risk assets go. In fact, maybe just a note on that. Yes, we're getting declines across the Asia Pacific, although that probably helps that we're slightly higher in U.S. futures. Not a lot, though. I should mention that. Similar with European futures after really what was a terrible session on Thursday, both in the U.S. and also in Europe, and hence, of course, that was our lead coming into the Friday session here. How does Asia look about this point in the session? So we're about 2 hours into Japan. And yeah, session lows on this 1.6%. And of course, as you can see, flip the page, please. We have tacked on a little bit more losses since the China and Hong Kong Open, which we'll get to in a moment. There we go. Nikkei's off 3. We'll have a look at the tech overlay in a moment with Anthony. The bond markets and your pain point here, 10-year yield, the U.S. 30-year yield is at the highest effectively since 2006, 2007. 18-month highs on the 10-year yield. And we now have full rate hike priced, in fact, I think last I checked, for September out of the Fed. Oil and nat gas coming up on your screen. So that's the geopolitical overlay. There's also the tech story with the earnings theme that's coming through. And so far, of course, the former has offset the latter as we speak, at least as price action is concerned today. Trading on a confluence of factors, right? As we were talking about there, tech weakness, macroeconomic risk. Anthony Stephens is here with us, our markets reporter, to tell us more about what he's watching.
So until now, we've seen micro strength offset macro volatility, right?
Yeah.
And at the moment, going into the current earnings season, you're seeing this kind of dispersion in results. So you're seeing hyperscalers facing some doubt from the fact that they're going cash flow negative. You're seeing some dispersion also in the hardware space. So we did, alongside the Intel beat, we did have the miss from ST Micro, and we had the miss from Disco in Japan today. That's playing out in the Japanese and Korean markets today with pretty widespread weakness in the chip space. So Disco in particular is getting hammered, but so is SoftBank on concerns about this hyperscaler spending. Now, just to quickly mention on that front, it's starting to become a bond story in hyperscalers. Bonds across the US kind of IG and high yield space are starting to sell off. Now, that ties into the macro story because you have this big bond sell-off on the treasury space from oil. So this confluence of macro and micro is hitting tech stocks. In Hong Kong, China, the picture is a little bit more resilient. So obviously, the Chinese have not the same ability to reach capital markets, but that's worked out for them. It's a lot more kind of cash flow driven than debt driven. So China has less kind of vulnerability on that front. And obviously, China is also a lot more resilient on the oil front, as they've shown in the prior cycle because of this inventory. So you're seeing that dispersion kind of play out today. What will be very interesting is how far the macro concerns can continue to hit the micro. And that is the kind of the theme for the next week's trading.
Yeah, that's right, Anthony. Like that question of duration and durability of some of these trends. I mean, oil now at over $100 a barrel. Just talk us through what we should be watching for, particularly as we head into next week.
You know, oil's reaction function is like when there's been a big step change in oil, the market freaks out. It's not that oil, moves around $1 or $2, anybody's very concerned. It's when you start to see these big moves of like $20 at a time. That causes a rate change. That causes a shift in inflation expectations across the short end of the curve. Now, it's exactly the short end of the curve that worries the tech trade, which is the biggest part of the equity market. And that is coming at a time of this increased technological dispersion and innovation. You continue to see these continuous headlines of transition from one technology to another. And that divergence between the different technologies at play, between GPU, CPU, TPU, Chinese LLMs versus US LLMs, and what are the biggest themes in the AI build-out, that is meeting macroeconomic risk, and that is going to make next week's trading much more complicated.
Okay, as if today was not complex enough. Anthony, thank you so much for the preview there. We have a weekend, of course, in between, so just to calm your nerves a little bit as we head into, of course, next week. Okay, EMFX, I mean, we talked about oil, right? And maybe just here's a number for you, 39% up this month in oil prices. So yeah, it's not so much the absolute level that Anthony was pointing out, right? It's the delta that really hits you. It's at 38% in a month is one of the biggest monthly jumps on record compared to what we saw in March and several other months, of course, in the last few decades or so. And hence, the Philippine peso, yes, 60, let's call it 62, record low. That touched it about an hour back at the open in Manila. That takes us into the Philippine story today and, of course, the geopolitical overlay there. And it's now the South China Sea. So China says, and this was about an hour and a half back, China says it has taken what it calls control measures against several Philippine ships in the South China Sea. That's after daily skirmishes this week significantly raised tensions between the two countries. And, of course, the two foreign ministers were just meeting, in fact, in the last 24, 48 hours in Manila at the ASEAN Foreign Ministers meeting. And certainly what a bookend this is to that. Stephen Engel, our Chief North Asia correspondent, is here with us about what took place in the last, let's call it last few hours or so.
Yeah, well, again, Lazaro, the Foreign Affairs Secretary of the Philippines, and also Wang Yi, the Chinese Foreign Minister, did meet in ASEAN. They exchanged their official formal protests for what has been sort of a week-long of escalating tensions, whether it was claims that Chinese sailor hit a Filipino over the head with a baton. There have been, yesterday, according to the Philippines, the Chinese Coast Guard was shooting water cannon at Filipino vessels. The latest is around Scarborough Shoal, which is known as Huangyan Island by the Chinese. It is up in the northern part of South China Sea, closer to Luzon in the Philippines, actually. There was other skirmishes involving that baton attack, alleged baton attack by the Chinese down in the Second Thomas Shoal, which is down further south in the Spratlys, closer to Palawan. But still, the two incidents over the course of this latest week have raised tensions between China and the Philippines that led to the official protest. Now, where this goes from here is another question. And Xinhua News Agency, we can bring up the full screen, a quote from the Chinese media, essentially quoting what the Chinese Coast Guard did, if we have that.
Yeah, the Xinhua News report, right? And this is
there it goes. Essentially, they took control measures in accordance with the law against multiple Philippine vessels engaged in what they called illegal activities within the territorial waters of China's Huangyan Dao. Taos Island. So that is Scarborough Shoal. Now, we don't know what those control measures are. Is it further, well, is it boarding of the Philippine vessels? Is it, again, containing the conflict with water cannon? We don't know. We need to get further details. We don't have a correspondent in Scarborough Shoal right now, but it's clearly something that has led to a diplomatic issue. Whether it's going to lead to further skirmishes militarily and, God forbid, any fatalities is yet to be seen. But Wang Yi has said, the Chinese foreign minister has said that he urged the Philippines to stop its maritime provocations.
I mean, Steve, you've sort of hit the nail on the head there, thinking about essentially how this escalates any further or whether it will be relatively contained. A big part of that is likely to be the US. I mean, how are we seeing President Trump or the US and White House responding?
Well, we are seeing a story that President Marcos claims that he had a phone call with Donald Trump, and he says Donald Trump has assured him that he will bring up this issue with Xi Jinping, I would assume, when they're meeting face-to-face in September. We also had Marco Rubio in the Philippines this week, the Secretary of State of the United States. He said it was concerning the actions by the Chinese. And here you're seeing a general map of the different claims by the various countries to islands and shoals, atolls in the South China Sea. China ascribes to its 9-dash line, which stretches all the way down to Brunei and Borneo, as you can see. But again, they're competing claims. Just on the Scarborough Shoal alone, China, the Philippines, and Taiwan all have claims to that atoll or that shoal. So we don't know how this is going to play out, but what we do know is just to the north of Luzon, as you can see there, between Luzon and Taiwan, that is the Luzon Strait. The 7th Fleet, we can bring up that photos as well. The 7th Fleet from the United States, I believe based in either in Okinawa or, Dave, I'm not sure if it's in Yokohama. But anyway, the George Washington Carrier Strike Group is sailing through the Strait of Luzon right now into the South China Sea for operations. We don't know what that means as it relates to the skirmish between China and the Philippines, and I don't want to read too much into it or inflame the story even further. But it adds to the complexity, if you will, with the United States Carrier Strike Force moving into the northern part of South China Sea at a time as well when a big typhoon is whistling through the Strait of Luzon as I speak.
Thank you very much. That's our chief North Asia correspondent, Steve Engel, there with the very latest on that friction between the Philippines and China. Now, sticking with geopolitics, the US is imposing new tariffs on most major trading partners, marking its biggest move yet to rebuild President Trump's tariff wall after a setback from the Supreme Court. Our Bloomberg editor, John Herskovitz, joins us now with more. John, just lay out precisely how comprehensive this so-called wall of tariffs is, and how this tariff regime, Section 301, differs from what we saw in the past.
Sure. Just the headline numbers are huge. It's 60 economies. This represents almost all of the imports that the U.S. receives from overseas. And it's the biggest trading partners of the U.S., from the EU, Japan, South Korea, across the board. But there are also a lot of carve-outs in this for automobiles, pharmaceuticals, goods that exist under existing trade deals. And I think the best way to describe what the final impact of this is going to be is that it's evolving. There have been exceptions asked for thousands of items. So headline numbers big. What it actually comes down to is still a work in progress, but it amounts to restructuring the tariff wall that Trump put in place with this so-called Liberation Day tariff. So a lot of countries affected in this.
Yeah, that's absolutely right, John. And we've kind of been mulling some of the bigger picture consequences here and what that means. One question, of course, is China. Now, the absolute addition to China tariffs is still relatively minor. If we can just pull up a chart, I think we might have. It still looks like something that our Bloomberg economics colleagues have said at least is quite sort of fairly doable to weather here. Here's that chart just there to give you a sense of where this moves the needle in terms of of China. Now, interestingly, although the rest of the world, it looks relatively minor, but it is really going to be a serious pain point for certain places. And we have seen countries now starting to lodge their concern, particularly ones that don't necessarily have that huge yawning deficit that Trump has previously complained about. John, can you talk us through some of the reaction that we've seen from countries so far, and where some of those biggest pain points that you were just sort of briefly mentioning earlier?
Yeah, as you mentioned, the China tariff is it's relatively marginal compared to what's out there. The thing is that these Section 301 tariffs for so-called use of forced labor, they've been telegraphed for some time. So countries have known that this is coming. We've seen some complaints about this. Some countries have talked about how they enforce the forced labor laws, but we haven't seen any retaliatory tariffs being lined up yet. Countries have shown that they dislike this. Then perhaps we may see some fights in court about this, because Section 301 is usually reserved for specific countries, specific instances. This across the board for so many countries is a new way to approach it. So the previous tariffs were under an emergency act, which was struck down by the Supreme Court. The Section 301 has more of a legal standing, but for smaller countries, within Southeast Asia, for example, this could increase the pain on them. For larger countries, not really sure how it's going to shake out. So a lot going on with this, still in the early stages, but the countries have had time to prepare, to present their cases to the U.S. about their framework for looking at forced labor issues. So the wall has gone up again, and as we saw the last time after the wall goes up, we get a lot of pushback and from specific countries, specific industries, and specific items.
Yeah, that's right, John. And not least to say, even in this part of the world, Singapore's top diplomat here kind of warning, pushing back against those tariffs, warning against that potential collateral damage, doesn't want to be caught up. We had some responses also, pushback also from Australia and New Zealand as well. John Herskowitz, thank you so much for joining us. That's Bloomberg's East Asia government editor there. Now, coming up, we speak exclusively to Cambodia's Commerce Minister about balancing trade ties with the US and China after Beijing's warning not to sign deals that harm its interests. That conversation is coming right at you in just a few minutes, so stay with us. You're watching The China Show. This is Bloomberg. Good morning and welcome back. Well, we have CATL earnings coming in today. That's China's top battery maker expected to report. We have a relatively low bar when it comes to kind of providing a boost. Their valuations at a year low, revenue expected about 57-58%. Dave.
Yeah, year low. Whether you're looking at the A or the H shares, I think we're trading on both on both listings, on both forward PE at about, I think it's about a 1 standard deviation below the mean. That's a look at the H shares on your screens. Median price target, there's certainly implied upside. It's almost overwhelming buy. H, and also when you look at the Shenzhen listing, that is even more so with more coverage. I think we're looking at 40 plus analysts. 46 buy, 0 holds, 0 sells, 16 times PE. Joining us here on set to talk us through this is Eugene Hsiao, head of China equity strategy at Macquarie Capital, with also a keen eye on the auto space and everything that goes into that. Very nice to see you. Happy Friday. Specific notes to watch as far as this specific earnings is concerned.
Yeah, I think in the short term, you can see that going into the print. There's been a lot of pressure. You know, after Q1, which is a blowout result, stock did exceptionally well. They issued $5 billion in H shares. We all saw that. But since then, it's just been a pretty steady derating. And I think a lot of that is really driven by a lot of this volatility around probably two specific things. The first is the domestic auto sector. It's continued to be weak, and I think that has become a drag even for CATL. The second is just this high volatility input prices. We saw lithium prices spike, I think, back in April or May, almost up to 200,000 RMB per ton in the futures exchange. It's back down to about 150,000 now. So this volatility is giving investors, I think, a bit of pause on what the actual impact is going to be on the margins.
What do you think it's going to be? To the longer-term story.
The longer-term story, as you can see with all the buy ratings, ourselves included, is very good. I think there's very little doubt about how strong the position of CATL is for a long-term investor. It's just there's all this near-term noise around the costs, around the demand picture in the near term that's getting people a bit of pause, especially after how well the shares did after the Q1 print.
Eugene, I want to ask here about the CXMT trading debut, this sort of mammoth debut that we're expecting to come through. Does that create any selling pressure for the sort of blue chip names like CATL?
Yeah, that's a great point. One of the pieces of work we've done recently is looking at this liquidity siphoning phenomenon over the last couple months. You could even say even longer than that, probably into late last year as well, with the raft of IPOs in H-share as well as abroad. Don't forget that just a couple weeks ago was that SpaceX IPO, and in the future, over the next couple months, you are expecting these big U.S. IPOs. You had the CXMT IPO. You had a couple more H-share big IPOs coming up as well, and that all seems to pressure a lot of that flow, especially on the Hong Kong market, from the existing stocks.
I want to ask also, just sticking with onshore Chinese market, what do you make of the sort of drop that we've seen in volumes? I think a 3-month low yesterday. Is this a blip? Is this something longer term?
I think that the volume picture will start to recover. I mean, there's a bit of seasonality you can imagine on top of that. But I think one of the issues is just there was so much euphoria, you could say, around that tech hardware trade earlier this year. And just seeing that start to ebb down, I think, has been probably the biggest headwind in terms of flows. Now, based on our discussion with investors, I don't think anyone is giving up, you could say, on the AI trade. I think most people do see that as continue to be a growth driver for global markets. It's just, have we sort of run ahead of ourselves? And I think that's the question that a lot of investors are trying to sort out today.
Yeah, and, as you put out, there's a lot of noise, a lot of news, a lot of information, a lot of listings, a lot of scrambling for your attention, really. Today, I want to ask you about this robo-taxi news, which is encouraging news, but the market doesn't seem to be as receptive to good news as it used to be.
Yeah, that's a great point. I think right now, it is this deluge of different data points on tech, on hardware, who has the latest model,
right?
Who has the best robotaxi system.
What's the policy like?
What's the policy like? And there's just so much I think investors have to absorb at any given time that it makes it hard for any one piece of good news to stand out. Ironically, bad news seems to stand out very quickly.
Right.
When you look at things like CapEx numbers, people seem to get very angsty about what's going on there. But the overall picture, I think, is, it is difficult for any of these themes that were really kind of hot last year to kind of stand out today in this market.
So how are you looking at that? Because that's interesting. So robotaxis and cars, and we were talking during the break on this. Most sectors seem to be headed in the direction of where autos are now, in the competition that they seem to be finding themselves in. How do you look at that as an opportunity or as a risk to any sort of sector call?
It's very difficult for China investors right now because the domestic market almost ends up going into that, the well-trodden phrase, involutionary phase, right? And that's what happened to EVs. Arguably speaking, that could happen to robotaxis. We're seeing a lot of these new players. Currently, there's the 3 incumbents, which is Baidu, Pony AI, WeRide. But, we saw the Momenta IPO come out a couple weeks ago, and they're looking at robotaxis. Horizon Robotics, another company, XPeng, another company. So you're seeing even more players moving into what was seen as a pretty kind of walled-off space. But that just doesn't ever seem to be the case in China.
Yeah, there seems to be a moat, but there's 50 people in that moat. And I think, AI Labs is another good example. So what's the advice to investors, whether that's sector, index, or overall market strategy?
I mean, the simple answer is being only exposed to China markets, it's very difficult. You have to make sure these players have a legitimate story to get out of China, effectively, that export story. So like a CATL or a BYD for that matter, you can see that those overseas numbers continue to be strong. And even with the robotaxi sector, you have players like WeRide, they're very clearly trying to say, we want to move into the Middle East, we want to move to Europe, we want to go to Singapore, et cetera, et cetera, et cetera, to try to give investors a bit of, I guess, relief that they don't necessarily have to be, dealing with a lot of domestic margin pressure.
Okay, well, jury's out on when and how that shows up in earnings, but it's certainly a runway that we need to consider. Eugene, fantastic. Thank you so much for coming in and taking the time to speak with us today. We could have covered a lot more. we'll leave that for next time, I guess. Eugene Hsiao, their head of China equity strategy at Macquarie Capital. We have lots more ahead. We'll have a look at big movers in a moment in equity markets, plus, of course, a recap of the big news in the last 19 minutes or so. Lots more ahead. This is The China Show. Right, welcome back. We're going to breeze through some of the big movers and big sector news across these Chinese markets. Let's start things off with Geely, and as you can see, we're up quite decently today. This is on the back of this JV, joint venture formation with Ford in Spain, which actually might help, of course, its runway outside of mainland China. China Intel supplier stocks. You probably heard that tagline, Intel inside. These ones go inside Intel if you look at it through that sort of prism. On the back of the earnings, of course, overnight, and you had a decent move in Intel India going into the Asian session today. Some of the pharma companies in focus here, in silico, and I think it's Xtalpi, is this JP Morgan has initiated coverage. And we're looking at an overweight from the company there, or from the brokerage, on AI drug potential. We're going opposite ways on both those stocks. We have plenty more ahead. This is Bloomberg. Japanese markets are headed into the lunch break. In terms of, the market direction, I don't need to talk about that. It's fairly clear on your screens. What we did get, just in case you missed that, were inflation numbers earlier on and coming in roughly in line with expectations. And, of course, the broader read across the rates markets is BOJ might need to move quicker. It does seem, of course, based on the reporting that suggests that's probably what's on the cards, given, of course, the exchange rate differential. And now with the information on oil and the Fed, and it's fully priced, by the way, currently on a Fed rate hike in September, that might even be the case even more so given everything else that's taken place on the macro side in the last, 18 hours or so, with inflation, oil, and yields all picking up globally into where we are right now.
Yeah, that's right. That's pretty precarious trifecta going on, and we're still watching, of course, the yen back closer to that key 165 level. But switching gear, thinking about Southeast Asia, we've seen Cambodia's Prime Minister pledging to step up a crackdown on transnational online scam networks operating out of his country. Speaking exclusively to Bloomberg, he told us international cooperation is needed to solve the problem, including between the US and China.
These are the cooperation to tackle common issues, go well beyond geopolitics. This is for the interest of all countries. Criminal network can attack countries that they don't have alignment with political. Anything they can exploit, they exploit. They can attack both U.S. and China at the same time for the benefit of money from scam operation or drug operation. So I see all this cooperation doesn't have to be confined within or be a hostage to, an area of what we call geopolitics. Sometimes it's too overblown when we focus on the negativities. But overall, the positive relationship between even the main, China and the US has existed for a long and multiple channel.
You talk about how these criminal groups are becoming more sophisticated. A UN report shows that now they're even acting like corporates, that they're using, for example, in the Southeast Asian region, some of these criminal groups, concessions within special economic zones to operate. And Cambodia has dozens of such zones. What is Cambodia doing to ensure that such zones are not being used to facilitate criminal activity?
Yes, we have learned from experience from other countries. We have, I give strict instruction to our security agencies, work with local government, working with agencies in charge of the SEZ to make sure that no SEZ has been used. If any SEZ is found to be covering for criminal scam, they will be liable just to the law, just less any others. So so far, we don't have any evidence on those. We're very careful on this matter. So a lot of SEZ in Cambodia is a platform and the area for attract of foreign direct investment in multiple sectors. So these are the areas that keep growing, and we continue to hope to attract more investment and expansion of the business both in the SEZ and outside the SEZ. We will be committed, and we are committed to continue to crack down on this. And we've seen, we have seen the result. We will make Cambodia become an area that not easy or worth to stay for scam online. This is what our commitment, and we will continue to do so.
Thailand has halted discussions on the border issues as Cambodia sought UN talks on the maritime dispute. What is being done? What efforts are being made to restart border talks?
I heard the Thai leadership, especially foreign ministers of Thailand, has stated that because Cambodia go to UN clause that closed the door for the land boundary. This statement, I like to say, a little bit inaccurate and a little bit unfair, based on two reasons. One, the reason why we go to the UN clause compulsory conciliation is because Thailand has decided to cancel the only existing bilateral agreement between Cambodia and Thailand on maritime, MOU 2001, which for 16 years, for 15 years, that both Cambodia and various Thai government, about 13, over 10 governments, have continued to try to work based on that, try to find solution, including two previous prime ministers of Thailand, Prime Minister Sita Thavisin and Prime Minister Leung during my time, that we work and try to find solution to the joint development and other areas. But unfortunately, after our warning, our request that Thailand not to cancel the MOU 2001, Thailand government continued to cancel anyway. So we have no choice but to go to the conciliation. Second, there's no conditions, no agreement or anything before.
There also seems to be misalignment between Thailand and Cambodia on what the UN talks should focus on. Thailand wants to focus and discuss the redrawing of maritime boundaries,
yes,
while Cambodia wants to focus on the joint development of these overlapping areas. As a gesture of goodwill, might Cambodia consider confining the scope of discussions to a resolution on maritime boundaries?
I think this point is too early. We need to go on, agree on the process of appointing the judge. Now we are working on the chairman. We have nominated two of the judges each side, and we need the chairman of the judge, the fifth judge, and we're still working on that.
So confining the scope of discussion for now is not something Cambodia would
It's not
consider.
something that we have posed over two proposal for delimitation and the delimitation and also the joint development area for the decisions. But like I say, for now at this stage, let's focus on getting the process moving.
And Avril just there, and in fact, she joins us right now again live from Phnom Penh with her next exclusive guest, Avril.
That's right, guys. Joining me now is Cambodian Commerce Minister Cham Nimul. Minister, great to have you, especially on a day like that, where we found out that Cambodia is going to be hit as well with 10% forced labor, 301 tariffs. That is on the lower end of the range, but there is also the access capacity component that's yet to be determined. What is Cambodia looking at right now? Is it still going to be 19% at the end of the day?
Good morning. Thank you for having me. Yes. Thank you for bringing up the topic. Actually, we all, at the moment, when we are finding out the decisions on Section 122 and 301s on excessive capacities, it's resulting in what we've seen as a ongoing discussion that Cambodia happened with the United States on our trading capacities. And yes, on the forced labors, we actually have taken additional steps with 3 Pacific ministries in line to enforce, to specifically show that we take great interest in preventing forced labor for importing into our countries. So with that, we know is that the ability to maintain below 19% is a possibility for Cambodia.
So are we looking at 10, 12, or somewhere closer to 18?
Within the range, that, and also the fact that Cambodia is also on the negotiating path for a quotas systems with the United States as well, alongside with other few trading partners like Bangladesh, Indonesia, Malaysia, for specifically sourcing raw materials for garments from the United States and to be processed and re-imported back into the United States quota-free and duty-free on that sense.
Does that make sense for Cambodia manufacturing and supply chains though?
Very much, very much. Our integrated vertical integration for garments is actually quite responsive to the raw material that's coming in. So, with finer quality resulting in finer outcomes of the product itself. The sourcings, the more the better, and our ability to be able to adapt and actually reducing the final cost of the products is what allow Cambodia to remain competitive in this sense.
What else is the U.S. requesting while these tariff negotiations are ongoing?
Many are on trade and custom duties facilitations. We're looking at electronic communication. We're looking at modernizing the system so that our customs differences can be taken into consideration, and how we are actually facilitating a lot of other understandings like standardizations, licensings, and many of the processings of manufacturing itself. So to us, those are great conversations as some of the very things that Cambodia has on our own agendas when we are gearing up to, ready for graduation from LDC status in 2029.
Cambodia also having conversations with China, recently signing an MOU and trying to get some form of agreement that whatever trade agreements are signed with other third parties will not come at the expense of China. How did that come about? Who initiated that?
Well, this is a mutual understandings from Cambodia and China's as great, partnership with each other.
Which China asked for.
Yes, yes, it was initiated by China's with our, participation in all of this. What's important is that, it's a great thing you bring it up because one great point I want to be able to share with you this morning is the fact that how Cambodia has always been remaining an open and, reliable trading partners. So an MOU of such, that we signed with China indicated how open and transparent we are and how we take in serious considerations the interests of our trading partners, and to ensure that the sovereignty of Cambodia is also taken into account, and the sovereignties and the interest, economic interests of our trading partners, all of our trading partners are taken to interest. And this through a proper consultation.
How is that going to work though? Because to not do things at the expense of China at a time where the US is still Cambodia's largest export market, and if push comes to shove, what realistically can be done?
Actually, a lot easier than you think. In the everyday manufacturing and process of everything, we see the incomings of it's both sides of interest. In fact, if you look specifically just at China's and United States as Cambodia's largest trading, import and exporting market, it's actually a complementarity of each other's. So one would not be infringed upon another's at all. Cambodia would be serving as a platforms that allowing a lot of the processings and the mobilization of economic activities, especially on the garment and footwears and textile Pacific industry to flow in back and forth all across. So I believe it's actually enhancing an integration instead, So not something that I would be worried in the way you have had, projected it. So.
What about worries given the border conflict, given how, trade is not coming in via the land border, and Cambodia did take in a lot of raw materials from Thailand prior to the conflict breaking out. How has Cambodian manufacturing adjusted?
They have been adjusting quite well. It has been 1 year. despite the fact that land borders has been, a unilateral closure by the Thai side, but through the seaport and through the airport, it's still an ongoing. Thailand as a Cambodia's +1 corridors has always been serving, but also at the same time, Cambodia has many other corridors that we are working on, whether it's with Vietnam and with Laos. So therefore, the trade routes is actually reconfigured itself, and we also diversifying our importing some markets as well. So that we see a rising trend, and all of this is projected and indicated with our exporting numbers that still continue to be on the rise, which is surprising given the facts that surprising to the publics, but not to us. We have been.
It's not enough to offset completely, though, right? What you're taking in from China or Vietnam in raw materials, because there's still quite a sizable reliance on Thai raw materials.
Well, it's still the nearest is always the best, of course, and sourcing costs its logistic costs, and all of that. But at the same time, diversifying our importing markets has been serving us of great interest. With this, many other trading partners have been able to, lock into agreements with each other. So we are able to source far more, and what's important, we are sourcing from domestic right now. So that's what we are actually deeply integrating within and doing that vertical integration I mentioned earlier.
Yes. How is all these near-term challenges, if we can put it that way, actually, maybe diverting from some of the longer-term reforms that Cambodia does have to undertake, because it loses least developed country status by 2029. Cambodia needs to start exporting higher value products, making higher value products.
That being said, actually, LDC's graduation is not a finish line. It's actually a milestone. And for us, it's reflecting the hard earned, and the sound policy that we have had all this time in order to achieve this particular milestone. So the next phase of growth for us is actually on, domestic enhancement and competition in order to further integrate ourselves globally. And that's what it is. So yes, SMEs actually appear to be facing a short-term shock and challenges, but not without our very responsive governmental policies in order to re-coordinate and be able to remain agile and responsive to their needs. And that being said, a lot of the trade processing, a lot of the trade facilitation are undergoing right now in order to modernize and facilitate them and be able to stay on path. So that small things, small shock here and there will not destroy our resilience.
Yep, end game in mind, stick to the goal, longer term plans.
Indeed.
Minister, great to have you. Thank you so much for the time today.
Pleasure, thank you.
Dave?
There we go. Play the long game. There's lots more coming up with Avril there, and of course our fantastic coverage out of Cambodia with the Deputy Prime Minister joining us exclusively on Insight to talk about Chinese investment in the nation's special economic zones and the growth drivers behind those investments. We have lots more ahead here on the China Show and on Bloomberg Television, as you can see. This is Bloomberg. All right, I'm going to make this quick. Stocks are down. Okay, why? Oil is up. Let's get to the oil story. Rebecca's standing by for us there. Rebecca.
Short and sweet on a Friday, Dave. I love it. Okay, yes, Brent crude holding above that $100 a barrel level after those strikes we've seen by Houthi militants on tankers in the Red Sea opened up a new front in the Middle East conflict. But ship tracking data still shows these two Chinese-owned oil tankers loaded with Saudi Arabian crude that have been able to exit that waterway. For more, let's bring in Bloomberg oil reporter Nicholas Loire. We're talking about this as if we assume this is a new phase. So if this is a new phase, I want to ask, how ugly can this get, and how is it different from this first era that we've already been through?
So I think we can think of the fuels crisis as having two phases, right, Rebecca? In the first crisis, early on in March, a lot of people panicked, and that's why we saw prices spike tremendously. And some of that came off as people realized that in certain parts of the world, like Asia, the crisis was not as bad as it looked at first. And as all these other solvers kicked in, right? So there was demand destruction, and that's across the board in like countries like poorer countries in Asia, Indonesia, where demand is destructing. People are driving less, cooking less. In India, for instance, where LPG was the most hard-hit oil product, people went home to the villages and, in a way, stopped cooking with city gas from the canisters, right? So there are all these ways that demand could destruct. And there are all these solvers like the SPR cargoes coming in from the US and all these governments from Korea to Japan releasing emergency crude for supply. A lot of these solvers aren't around in quite the same way the second round. And I think that's why we stand to look at the crisis. In fact, Europe may stand to be the epicenter of where this all blows out again the second time round.
So talk us through the Europe story. And in some ways, I was at the Bloomberg Sustainability Summit, and there was a discussion that Europeans may no longer have the luxury of being able to, for example, sustain those sanctions it has on Russia. I mean, what is the scenario that we're seeing as we enter the summer?
So I think Europe's refining system is older and less advanced than the rest of the world. They've set these refineries up a long time ago, and ESG concerns meant a lot of them were set up for closure, consolidation, and so on. So what that means is that Europe's entering this oil crisis with less refining available to produce the fuels it needs. And for a long time, it's been a net importer, right? So it looks to places like India, the Gulf, to get these cargoes, with the Gulf supply cut, with Asia's demand sort of pulling Asian barrels to the Asian basin. That means that Europe actually has very few places it can tap on, right? So it looks to places like the US to get some of these cargoes. And that's been done earlier in the crisis. But the US is also keeping its cargoes domestic, right? A lot of diesel is being produced for US consumption. It's not going to Europe. And what that means is that Europe doesn't have that many levers to pull, right? And its own domestic refining system, already old and small to start with, now is dealing with a heat wave. Now, refineries are very sensitive machines. They don't respond well to high heat. So with record heat waves in Europe, we're all standing by for more outages. We've in fact seen a few outages at plants already. And that just means that the crisis, where it's going to be the shortest, are the people who, in a way, can't afford it the most, I think.
It's an acute crisis that we're seeing. Thank you for taking us through Europe, Asia, Southeast Asia. That's Bloomberg oil reporter Nicholas Loa there. And just let's take a quick peek at how Asian markets are doing as we head into the break. Dave said it earlier. It's not a good day for equity markets. The Hang Seng down 1.5% or so. Kospi also really hurting, nearly 6% there. Stay with us. You're watching The China Show. This is Bloomberg.
Welcome back. Just before we wrap up the show for the week here, just to take you through some big stories for tracking and then markets. We'll start things off, this big HSBC announcement. So Allianz is buying HSBC's Singapore life and health insurance business for $2.1 billion. They have also agreed to a 15-year exclusive partnership, allowing Allianz here to provide insurance and other products to HSBC customers in Singapore. Now, the sale is part of the bank's streamlining efforts under CEO Georges Elhedery. Okay, staying in Singapore here, GIC, that's a sovereign wealth fund there, will deploy an extra $30 billion into hedge funds. That's the allocation, of course, over the next 3 years. The group CIO, Brian Yeo, told us that GIC has already tripled its hedge fund investments over the past decade without giving a specific amount. He identifies global macro and quant and multi-strategy funds as their key areas of interest. Right. Our key area of interest as we go into the thick of Friday is really the pain we're seeing across EMFX, perhaps with the exception of the South Korean won in this specific graphic. You can blame geopolitics, you can blame oil, you can blame this repricing around the Fed, which is fully priced for a hike in September. Yes, tariffs are also part of that equation. So, in fact, the Philippine peso, we just used this earlier on, all-time lows on that. And I would watch, by the way, in the next hour, the Indian rupee. When you get oil prices moving up, similar dynamic to what we're seeing here, that should also put some pressure on the Indian currency next. Equity markets are not in good shape. So we're going into the weekend with some really strong downward momentum, and unsurprising given what we saw overnight in the U.S. and a massive sell-off across the tech space. So Korea is at session lows. We did get the sidecar triggered yet again. It is, as Anthony Stevens, our markets reporter, pointed, it's sidecar season and has been so this month so far. A very quick glance at the Hang Seng Index. We're about an hour and 30 into the cash market session. They're decently holding up compared at least to what we're seeing elsewhere in the region. A glance at what we're looking at on the other side of this weekend. So on Monday, It's a CXMT trading debut, Zhongji and the light as well. That's in Hong Kong. CXMT is on the mainland. Central bank decisions, Fed and the BOJ. Of course, a ton of earnings still out of the U.S. and in the macro side in China. July PMIs are also coming out also next week. Okay, so that's it from us here. Have a good weekend. We will see you all next week. Say hi to the team. See you all on Monday. This is Bloomberg.